Stock market investing, real estate investing, or crypto investing? Where should you invest in 2025? With so many options, it can be overwhelming to decide which one is best for you. In this video, I'll break down the pros and cons of each investment, compare potential returns, and help you make the smartest choice. Let's get started. Before we dive in, make sure to smash that like button and subscribe for more investing insights every week. The future of investing is here, and it's time to make informed decisions. Stay tuned for the best investments 2025 and discover where to invest money. The stock market has been one of the best wealth-building tools for decades. In fact, the S&P 500 has delivered an average return of 8 to 10% per year over the long run. But is it still the best investment in 2025? Let's break it down. Liquidity. You can buy and sell stocks instantly. Diversification ETFs and index funds lower risk. Long-term growth. Historically, the market trends upward. Volatility market crashes can wipe out gains. Emotional investing. Fear and greed can lead to bad decisions. Best strategy? Dollar-cost averaging into index funds like the S&P 500 or investing in dividend stocks for passive income. For example, if you invest a fixed amount regularly, you buy more shares when prices are low and fewer when prices are high, averaging out your cost. Dividend stocks provide a steady income stream, which can be reinvested to compound your returns over time. Remember, a diversified portfolio can help manage risk and improve your chances of long-term success. When considering the best investments for 2025, don't forget to explore real estate investing and crypto investing as well. Knowing where to invest your money is crucial for future financial success. Real estate has created more millionaires than any other asset class. With rental income and property appreciation, real estate can be a powerful investment in 2025. But is it right for you? Let's dive deeper into real estate investing. Cash flow. Rental properties provide passive income, which can be a steady source of earnings. Leverage. You can control a large asset with a small down payment, amplifying your investment potential. Tangible asset. Unlike stocks, real estate is a physical property you can see and touch. High upfront costs. You need capital for down payments and maintenance, which can be substantial. Illiquidity. Selling a property takes time, making it less liquid than stocks or bonds. Market risks. Housing market crashes can lead to significant losses, impacting your investment. Best strategy? Consider house hacking, rental properties, or REITs, real estate investment trusts, for diversified exposure. Educate yourself. Read books, attend seminars, and take online courses to become a savvy real estate investor. Network. Connect with successful investors and property managers to learn from their experiences and strategies. Whether it's stock market investing, real estate investing, or crypto investing, understanding your options is key to finding the best investments 2025. Knowing where to invest money can make all the difference. Cryptocurrency had an insane ride in the past decade, with Bitcoin going from a few dollars to over $60,000 at its peak. But is it still worth investing in for 2025? High growth potential. There's a massive upside if you pick the right coins. Decentralized finance, or DeFi, is bringing new financial innovations in Web3. The market is open 24/7, so you can trade anytime, anywhere. But there's extreme volatility. Prices can swing 20 to 50% in just days. Regulatory uncertainty is another issue, as governments are cracking down on crypto. Plus, there are scams and security risks. Hackers and rug pulls are real dangers. So, what's the best strategy for crypto investing in 2025? Invest in blue-chip cryptos like Bitcoin and Ethereum, use dollar-cost averaging, and never invest more than you can afford to lose. For example, Bitcoin's price history shows significant peaks and troughs, making it essential to understand market cycles. Ethereum, on the other hand, powers a vast ecosystem of decentralized applications and smart contracts, adding intrinsic value. Security is paramount. Use hardware wallets to protect your assets from hacks. Remember, even major exchanges can be hacked, so personal security measures are crucial. Diversify your portfolio to spread risk across different assets. Educate yourself continuously. The crypto space evolves rapidly, and staying informed is key. Adopt a long-term perspective. Short-term volatility can be daunting, but a long-term strategy can yield significant rewards. With the right approach, cryptocurrency investing in 2025 can be highly rewarding. Whether you're considering stock market investing, real estate investing, or crypto investing, it's crucial to stay informed and strategic. These are some of the best investments 2025 has to offer. So, where to invest money? The choice is yours. So, which is the best investment for 2025? Well, it really depends on your goals. Want stability and long-term growth? Stock market investing is a solid choice. Go for the stock market. Looking for passive income and leverage? Real estate investing is your friend. Real estate is your friend. If you're after high risk and high reward, crypto investing might be your game. Then crypto might be your game. The best strategy? A diversified portfolio with a mix of stocks, real estate, and a small percentage in crypto for maximum growth and safety. Remember, the key is to balance risk and reward to achieve your financial goals. When considering the best investments for 2025, think about where to invest your money wisely. Gap 2S. In this chapter, we'll discuss various investment strategies that can help you maximize your returns in 2025. Whether you're interested in stock market investing, real estate investing, or crypto investing, we've got you covered. From value investing to growth investing, we'll cover the pros and cons of each approach and provide tips on how to implement them effectively. First up, value investing. This strategy involves picking stocks that appear to be undervalued based on fundamental analysis. The idea is to buy low and sell high, capitalizing on the market's tendency to correct itself over time. Pros? It's a relatively low-risk strategy if you do your homework. Cons? It can take time for the market to recognize the true value of the stock, so patience is key. Next, growth investing. This approach focuses on companies that are expected to grow at an above-average rate compared to other companies. Think tech giants or innovative startups. The pros? Potential for substantial returns. The cons? Higher risk, as these companies might not always meet growth expectations. A balanced approach might be a combination of both strategies. Diversifying your portfolio with a mix of value and growth stocks can help spread risk while positioning you for potential gains. Remember, no single strategy is foolproof. The best approach is to stay informed, do your research, and adjust your strategy as market conditions change. For the best investments 2025, consider where to invest money wisely. Happy investing. Risk management is crucial in investing. In this chapter, we'll explore different risk management techniques such as diversification, asset allocation, and hedging. We'll also discuss how to assess your risk tolerance and create a balanced portfolio that aligns with your financial goals. First, diversification. This involves spreading your investments across various asset classes such as stocks, bonds, and real estate. The idea is to reduce your exposure to any single asset, thereby minimizing risk. For example, if one sector underperforms, other sectors in your portfolio might compensate for the loss. Next, asset allocation. This strategy focuses on distributing your investment across different asset categories based on your risk tolerance, investment goals, and time horizon. A well-balanced allocation can help mitigate risk while maximizing returns. For instance, younger investors might allocate more towards stocks for growth potential, whereas those nearing retirement might prefer bonds for stability. Hedging is another technique used to manage risk. This involves taking an offsetting position in a related security to reduce the impact of adverse price movements. Common hedging instruments include options, futures, and other derivatives. While hedging can provide a safety net, it's essential to understand the costs and complexities involved. Assessing your risk tolerance is also vital. This means understanding how much risk you're willing and able to take. Factors like your financial situation, investment goals, and psychological comfort with market fluctuations play a significant role. Tools like risk assessment questionnaires can help gauge your risk tolerance. Finally, creating a balanced portfolio is key. This means aligning your investments with your risk tolerance and financial objectives. Regularly reviewing and rebalancing your portfolio ensures it remains aligned with your goals and market conditions. Remember, effective risk management is not about avoiding risk altogether, but about understanding and managing it to achieve your financial goals. Whether you're into stock market investing, real estate investing, or crypto investing, these techniques will help you navigate the best investments in 2025. Happy investing! Staying informed about market trends is essential for successful investing. In this chapter, we'll analyze the latest market trends and predictions for 2025. We'll cover key economic indicators, industry developments, and geopolitical factors that could impact your investments. First, let's look at economic indicators. GDP growth, inflation rates, and employment figures are crucial metrics that can influence market performance. For instance, a robust GDP growth rate can signal a healthy economy, encouraging investment. Conversely, high inflation rates may erode purchasing power and impact corporate profits. Next, industry developments. Technological advancements, regulatory changes, and consumer behavior shifts can create opportunities and challenges within specific sectors. For example, the rise of renewable energy technologies could benefit companies in the green energy sector, while stricter data privacy regulations might impact tech firms. Geopolitical factors also play a significant role. Trade policies, political stability, and international relations can affect market sentiment and investment flows. For example, ongoing trade negotiations between major economies can influence global supply chains and market dynamics. To stay ahead, investors should regularly review market reports, follow financial news, and consider expert analysis. Subscribing to reputable financial publications and attending industry conferences can provide valuable insights. Additionally, leveraging financial tools and platforms that offer real-time data and analytics can help you make informed investment decisions. Remember, staying informed about market trends is not just about reacting to changes, but also about anticipating them. By understanding the broader economic landscape and staying updated on industry and geopolitical developments, you can better position your investments for success in 2025 and beyond. Whether you're into stock market investing, real estate investing, or crypto investing, knowing where to invest money is key. Happy investing! In this final chapter, we'll address some common questions and concerns about investing in 2025, including stock market investing, real estate investing, and crypto investing. From understanding market cycles to dealing with market volatility, we'll provide practical advice and insights to help you navigate the investment landscape with confidence. First, let's talk about market cycles. Markets operate in cycles, typically characterized by periods of growth followed by downturns. Understanding these cycles can help you make better investment decisions. For instance, during the expansion phase, it's often a good time to invest in growth stocks, while in a downturn, more conservative investments like bonds might be wiser. Next, dealing with market volatility. Market volatility refers to the frequency and magnitude of price movements in the market. It can be unsettling, but it's a normal part of investing. One effective strategy to manage volatility is diversification, spreading your investments across different asset classes to reduce risk. Another approach is dollar-cost averaging, which involves regularly investing a fixed amount regardless of market conditions, helping to smooth out the impact of market fluctuations. Another common concern is the impact of global events on investments. Geopolitical tensions, natural disasters, and pandemics can all influence market performance. While it's impossible to predict these events, having a well-thought-out investment strategy and maintaining a diversified portfolio can mitigate their effects. Lastly, let's discuss the importance of having a long-term perspective. Short-term market movements can be unpredictable, but over the long term, markets have historically tended to rise. Staying focused on your long-term goals and avoiding the temptation to make impulsive decisions based on short-term market noise can be key to successful investing. Remember, investing is a journey, not a sprint. By staying informed, diversifying your portfolio, and maintaining a long-term perspective, you can navigate the investment landscape of 2025 with confidence and find the best investments 2025. Thank you for joining us on this journey, and happy investing. Remember, knowing where to invest money is key to your success.